Hey guys, Max here, and this is going to be rather a quick market recap video today with a second video coming out later that I'm sure you can guess the topic of. It is, of course, about Elon finally buying Twitter. That deal was actually accepted yesterday, and that will also be quite short, but let's just get right into it now. So the markets yesterday were actually really rather choppy. They ended up green, but it wasn't an easy day at all. As you can see, energy stocks tanked by and large. Oil and gas stocks fell entirely, down 3, 4, sometimes even 5% for the day. Tech, on the other hand, actually did rather well, big tech especially. Microsoft was up by 2.4% for the day, Google was up by 3%. Now the old world, for the most part, did fine but really didn't do anything special. Financials or banks were down slightly for the most part, real estate also was down slightly, along with utilities and industrials, and then consumer defensives were quite steady. Basically, tech did really well, energy did really poorly, and everything else was more measured in the US markets. As for the indexes then, the S&P 500 rose by about 0.5% by market close, and the Nasdaq rose by 1.3%, again because tech did better, so we should expect the Nasdaq to outperform slightly. Now the S&P 500 was down by almost 2% for about half of the day. The Nasdaq was down by as much as 0.8%, so it really was a choppy day that saw a late evening rally that led us to that green close. Now, over the rest of the world, actually stocks fell for the most part, this time on COVID fears, which is a new one we haven't seen for a few months now. Chinese stocks in particular tanked all over the place. Shanghai has been in lockdown for weeks now, and it's starting to look like Beijing is going to go into a full-on CCP mandated lockdown as well, which would be absolutely awful for China's markets for obvious reasons. It would stifle business activity, it would hurt these companies' earnings, their revenues, it would stop people going to work and school, people would spend less money. Of course, we all know now lockdowns are bad for the economy and thus for the markets. But the big problem with this from our point of view, from the West, is that this is also awful for supply chains because we are so interconnected with the Chinese. There are already huge backlogs all over the world in pretty much every port, but in Chinese ports especially, and those are going to get worse. Inflation is going to get worse. This is another supply side shock that we're about to get, and so European stocks fell for that reason. Now, Chinese stocks fell 9% over the last 5 days. That's the SSE or the Shanghai Index. So that was pretty awful. The Stock 600 fell by 3% over the last 2 days. So again, not great. Now, why was America seemingly immune then? Well, it isn't 100% clear, but it's probably just investors focusing on the big corporate earnings announcements that we're going to get out this week. The big ones, of course, being Google, Apple, Amazon, and Facebook. The US markets are also more speculative and less based on the underlying assets of the markets, so they mostly just shrugged off these China and COVID fears. Maybe today will be a different day though, I can't really say. We also had the big Elon effects. The big news, of course, was that Elon is officially buying Twitter. The deal that he made to Twitter has been accepted officially. I covered this on my Twitter yesterday, so go check out those links in the comments and the description down below to stay 100% up to date on all news like this. I tweet constantly. But in general, this is slightly bullish for big tech. I'm not surely why, but it's just strong investor sentiment creation across the board. Investors are happy reading up on this, even though Twitter is just going to be made private. Now, I will of course cover the Twitter deal in detail later on this channel. All you need to know right now though is that the company's going private with Elon at the helm. Shares are to be bought at $54.20 a share. The current share price is just under $52 a share, which is a 5% gain from yesterday. And for once, I'm actually going to say that is perfectly expected. And actually, again, for once, that is rational markets at work. There is a slight discount from the share price today compared to the level that Elon will be buying them at in case the deal takes a long time to actually go through, in case it reaches antitrust action from the US government or something else, or if the deal just falls through altogether. Now that is very normal behavior for a public company getting acquired. So actually that rise, that 5% rise that usually you'd expect me to say was irrational markets at work and the result of gross money printing for years on end, actually that makes sense. Now the dollar rose slightly by about 0.3% for the day, strengthening still, continuing that trend. The US economy is just steadier and more reliable, and so dollars are just still more desirable in certain times, so the dollar is advancing against every other major currency. Now, bond prices actually rose for once. Yields fell, and not by a small margin. The US 10-year Treasury yield fell by 7 basis points yesterday, and it now sits at 2.83%. Let's not get it twisted though, that is still very close to a 4-year high. It's still a very high yield. Now, German 10-year bond yields fell by 13 basis points and British 10-year bond yields fell by 12 basis points. So across the board, bond prices rose and yields fell. Oil prices fell again by a pretty decent margin, and that explains why energy stocks did so poorly. WTI crude oil fell by 3% for the day. It's now sitting at $99 a barrel, which is really nice to see it under $100, and that should be bullish for stocks, but probably it's just a bit of a short-term move, and I personally doubt it will stay below $100 a barrel, and most investors seem to agree, so no one's really getting too excited about this, especially with the chaos in China continuing to get worse. Gold prices fell, reaching recent lows of about $1,900 an ounce. They haven't broken below that level, but that is still a good $50 an ounce lower than where it's been recently. Personally, I'd actually really quite like to see gold prices re-enter that $1,800 mark so I can buy more at a nice entry point. We will just have to wait and see though. Now finally, what happened in the world of crypto? Well, it was for the most part a strong day following a few weekdays. Bitcoin was sitting at about $38,000 and Ethereum was sitting at about $2,800. Over the last day though, both of those major coins rose by 4 or 5% each. Bitcoin's back at 40k and Ethereum's back at 3,000, so that was a decent rally, and for the most part the market was bullish. Altcoins as well, mostly not too important what happened to them, but they were mostly bullish too. They rose in similar amounts, anywhere from 2 to 5% gains for the day. The big news though was Dogecoin, which proved to be a massive outlier. The price of Dogecoin rose from about 12 cents to almost 18 cents, which is close to a 50% gain in one day. Right now, the price of Dogecoin has settled at around 16 cents, or about 35% higher than it was. Now, why is it up so much? Well, again, it's all based on Elon's buyout. Elon loves Dogecoin. We know this. He likes to tweet about Dogecoin. He likes to pump the price of Dogecoin. He may be the largest individual holder of Dogecoin. There's a lot of speculation going on. It isn't really too clear, but he's also hinted in the past that he might allow purchases or some kind of marketplace using Dogecoin with Tesla, selling cars with Dogecoin. And he said that he would like to see the same thing happen with Twitter. Now that he's going to take the company private, the likelihood of that happening has increased, of him actually implementing Dogecoin payments onto Twitter. So the price of Dogecoin pumped on that news. It is probably a little bit premature and a little bit too volatile. A 35% gain on that news alone is huge, but it's crypto and it's Dogecoin, so what do you really expect? It's also not actually a ridiculous idea. I could see Elon pushing Dogecoin harder now. He's going to be tweeting more, I'm sure, and he could be giving the currency a real use case. So I understand that increased hype. It's of course, though, not something I'll buy into on that news alone. Now, for the rest of the week, what do we have coming? What are the things to watch? Well, again, corporate earnings are going to be very important for the big tech companies in particular. We're also getting figures from the United States' GDP figures for the last quarter and weekly jobless claims as usual on Thursday. So those will be quite important too. Le Pen, of course, lost the French election and the markets are a little bit more stable as a result of that. It's not exactly stellar though. Le Pen was priced as losing the election anyway, so now that she has lost the election, it's not really a major change to anything. Macron is the safer, more stable option in my opinion, and really in the opinion of the markets too. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that can help you protect your portfolio against inflation through fractional shares of art from world famous artists like Banksy. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets on the brink. It's completely free to sign up, so make sure to check that out. Link as always down below in the description. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get over 7% interest on stablecoins to protect your hard-earned cash from being eaten away by inflation. Thank you all for watching. Stay stoic. Until next time.